The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, 877-927-6648. Love to take your calls. Look at this chart. Let's go through a number of these things. First of all, it's great to be back. Saturday afternoon, I did the dumbest thing. I decided that I would update the Comcast modem for a couple of reasons, and I thought, shouldn't I? I've been debating it. And I said, I've just got a new computer, I've got this, I've got that, let's just be fresh. So I take it over to Comcast, and before I can even discuss it, I'm saying I'd like to upgrade, but tell me about it. He says, well, they've gone from 4 outlets to 2 outlets. I said, hey, wait, an upgrade usually has more, not less. Meantime, as he's doing it, he's busy typing away. Next thing I know, my service is cut off. He gives me the new box, and I say, well, I don't know if I should take this box. Let me just call my man. My man, I called Dan, and Dan had just closed. I mean, he was off. And so I was kind of stuck. So I said, you know what, just give me back my old box. No, everything's done. You can get your old box, but it'll be a brand new old box. I said, then what I have to do? He said, well, you've got to call Comcast, and they'll just check it off and go through it, update it, and it should work. Of course, should work and would work are two different things. Of course, I get back, I plug everything back in. It's the way it's supposed to be. And the lights are flashing. I call them up, and an hour and a half later, we still haven't got it to work. And they tell me that, so I said, oh, now you're going to tell me that you're closed and I have to wait until Monday before you can get a serviceman? No, she said, let me check the times. Wednesday. I said, are you crazy? What are you talking about? What kind of service is this? So she said, no, I'm going to do my best. I'll see. She says she managed to squeeze me in for Tuesday morning. Thank goodness, my guy is so good. He said, hey, I called him the next day, and he said, you know what, you go over, you get the box, we'll just set it up. Get the new one, we'll set it up. I've got a splitter and all that stuff. He came, he set it up. So thank goodness, everything's working again. Unbelievable. How do you run a business when you're going to shut off your customers who could be doing anything in the world? I mean, it could be the most life-threatening or life-saving instance or a business thing, and you tell them, all right, well, you won't have any oxygen until Wednesday. Good luck. I mean, really, Comcast. And then to top it off, I have a backup. Of course, you always have to have backups. So I have a backup Verizon service. There's a whole story attached to that as well. I have their special thing called Jetback. I use it only rarely, but I need it when I need it. I'm on the road, or I'm here, and I want privacy, whatever it is. So I have the Jetback. And it's not that great, but it's the best of the years. And what happened is the battery is fading, and I didn't want to risk my wife not having her service on her machine, so I didn't touch it. So and not only that, the new computer, I hadn't quite set it up correctly for the Verizon card. So all in all, I was just, my wife said, look how much time you've got here. I said, I can't believe how much time I spend on all my charts every week, every day, every night. I'm always there looking at everything. That's why I think we've done pretty darn well for my newsletter service. But wow, that was terrible. All right, I'm back. Let's not waste time. So we've got the Dow. Look, the left side chart has this rectangle formation. It's being in a trading band since the high of the 16th. Now, people like if I kind of update where we are. I can't give you any new positions or anything like that. It's not fair to subscribers. But back on the 23rd was the high at 26,695 in the Dow. The day before we had gone short. We were able to take profits all the way down, eventually switching at the very low on the very low of June the 3rd, we went long, very, very long, the Dow. And the next day we took off our short positions completely. There's just a little bit that was left. And on the way up, we did take a little profits, and we've taken a little profits on the way up, but we still have a good position. But I said today we'll lighten up a little bit if certain conditions are met. They haven't yet been met. But at the exact day of the high, of all-time high, 27,398, we managed, using the Chapman wave methodology once again, we managed to start shorting 7 points of the all-time high. And we've kind of added to that, but I am risk averse here in the sense that we have our positions. I'm still keeping tight stops, and I'll tell you why. I don't know what's going to take us down to this. Look at this weekly chart. This is the day. Look at the weekly. What it's going to take us all the way back down, unless the Fed is really hamstrung tomorrow, because I think reports are coming out that are really pretty positive. So I'm looking at this and I'm saying, okay, fine. The low that was made on June the 3rd, I don't know what will take us back down there. And it's going to be, I don't want to waste 2% or 1% or whatever it is, keep going, getting back in. I said, let's keep our a part of the position on the long side, but we'll add a more overweight to the short side right now, which we can deal with. I don't mind losing a little bit on the short side if I'm keeping the long side, because we break out to the upside. This is very difficult when you've used up time and not price. It means there has to be a really bad news event to create the momentum to break key support levels. And look what we've got here. We've got support levels all the way into the 26,900s in the Dow. So it'll take a move down to 26,920 very quickly, and then 26,850 very quickly to really build momentum to the downside. That doesn't mean to say everything's great and we can soar now to the upside, but it does mean to say that we could continue this choppy sideways move for a while longer. Okay, so that weekly chart, look, the MACD is strong, stochastics at 94%. That's really good. Look at those 3 bars, 4 candles we've had in almost the same area for 4 weeks. And look at the monthly chart, almost breaking out of that Chapman wave inside track repellent line. This thing starts trading, Dow starts trading in 27,500s at any point in the next week or two. That's going to be a big deal. So we've got a lot of information that needs to be absorbed by the market. We're in a sideways trading band right now, waiting for that. Look at the S&P. So look at the monthly chart. The MACD hasn't yet crossed positive. That's still a negative. And the stochastic is good at 80%. It's not great, but it's good at 80%. And the price has gone to all-time highs. There's nothing. And you remember I drew in this rising wedge formation. We hit the top of the wedge 2 bars earlier than I thought. And that's kind of good. Let's look at the S&P. S&P is trading right now. It's a little weaker than the Dow. It's down 9. S&P Dow is down 51. S&P down 9 at 3,011. Hit the 14, almost hit the 14-period moving average. 3,000 is the level that we're looking at. 3,001. Oh, it did, touched it. 3,001 is the 14-period moving average. I would suggest to you that even with this pattern here, I'm going to talk about this kind of pattern in a moment when we talk about a stock I was asked about, but let me just draw in this rectangle. We can go above the rectangle. We could even go a little bit below the rectangle. That would take us to the 2977 level and maybe go under and then back in again. That would be a fantastic consolidation, taking time, not price. I'll be back in a few minutes. Got a lot of questions to answer. Basil Chapman, Tiger Technicians Hour. Dow is down 50. I'll be right back after these important messages. Hold tight. We'll be back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So I just had a question. If I would just show the intraday quickly, just for chart patterns. That's why I do it. This is enough for you to trade off. Yeah, we did make a low back at 3,050. Just after 9:30, and then it goes ABC1, C2, then it actually goes DEF, pulls back sharply, and now we're in a new gray leg A. That's the 2-minute chart, and the 10-minute chart still has to make a leg D above 3,015.50, and the 5-minute chart has already done that, went to a peak D, and has pulled back, but had a high-level consolidation so far. I'll put this rectangle to show you how important rectangle formations are, and it's just snuck out of it and come back in, a little higher low, and that's good. Let's see if we can get to 3016, which is the 200-period exponential moving average in this particular chart formation. All right, let's get back to our story. So the weekly S&P is in this inside track repellent zone. That's the reason why I think we can pull back a little bit here. Doesn't have to be price, could be more time. We'll see. We're prepared for anything. We've still kept all our long positions. Yeah, we're just trying to hold them as long as we can. It's really important. We're in positions that were very good, 10, 15, 20%. I just don't want to give those up. It's going to be hard to get back in if there's a high level consolidation and it doesn't really plunge. So that's that. And the S&P monthly has gone to the upper end of this Chapman wave inside track repellent zone. If it starts to trade in the 3,000, I'll just make it simple. You go to 3,038, you can go even higher. Now I've got a bunch of questions coming in, but let me finish this up. The QQQ right now, I'm looking at new. Where am I? I need to see. I've changed my window, all my different sideways and up and down. Oh, and mice. Let me just check. There's a hard one. Yeah. Okay. Good. Thank you for the information. I really appreciate that. Okay. Now let's go to the Qs. The Qs made an all-time high at 195.55 on the 26th. That's a 55 right there. 55, and it's pulled back a little bit. The weekly chart's in leg D. Monthly chart has broken out from that rising wedge formation. We've got 2 days to go, one and a half days to go. And then we're done with July. Let's see where this closes. But in the meantime, back in the range, this is a high-level consolidation, just higher highs and higher lows. Easy thing to say. As soon as it turns around and starts to make lower highs and lower lows, that's going to be a different situation altogether. So far, the MACD is not confirming the rally. Stochastics at 85% and good, but the weekly chart's very strong MACD, very strong stochastic at 94%, and the monthly chart is 0.03 positive in the MACD with 2 days to 1.5 days to go. Will it close positive? That's going to be very important because the stochastic is good at 82%. This is a leader right now. Apple coming up today in 3 of the 4 indices. Apple trading down 147, making higher highs and higher lows, bumping into inside track repellent zone. Let me just make sure that you know what I'm talking about. Color is green. This one is color is red. Parallel, make it red. And now you'll see what I'm talking about. Easy technique I developed years and years ago. It really helps. Just gives you another thing to look at right here. Okay, so for Apple to really break to the upside, first of all, the 215.31 high of May at peak C with that very sharp drop from 215 down to 170. That was a big move, 45 points. We're looking at, yeah, so we're off 208, we're off 7 points. It's going to have a spectacular week to get over and start a leg D in a very decisive way in the weekly. This could chop a little bit longer before it goes to the D, but overall the monthly chart says, hey, Apple is a great company. It's just stuck in a big range right now. Just have patience because at some point it will break into the 220s, but it might have to do a little bit of digesting between the 210 and the 185, 190 area for a little while longer. Let's see what happens today. Let the market tell us. The IWM right now is trading up 58 cents, 156.73. Horrible candle early this morning, and now a beautiful green candle. This is attempting to say, hey, everybody, don't forget about me. I'm the Russell 2000 small caps. If there is a problem in some of these biggies, I'm right here. I'm raising my hand because I'm ready to take over if you need me. That's the way I'm looking at it right now. I have no hesitation in saying to subscribers, hey, let's start looking at the IWM as a counter to any weakness that we see in the big caps, because the small caps, they need their turn. And I think a lot of fund managers are saying, hey, I wish they would go. They can go all the way to 173.39, the old high. And we're way down to 156.76. So just keep an eye on it. It's in a trading band for sure. Look at that beautiful trading band between 153 and 158. It's just stuck. Let's see if it's going to break out in this big oval. I'll talk about that maybe tomorrow. Next thing I want to do is show you gold. Gold's doing very nicely. It's up 7.6 at 1440, but it is stuck. Remember I said a rectangle formation. This is the Chapman wave methodology rule of thumb. A rectangle formation can last a lot longer than your patience. And with that said, look, it's stuck between the 14, really basically 1450, 1454, 4.4 was the high of the 19th of July, but it's stuck in this range. And very good support between 420 and 413. So it's still in this range. Now silver is a little different. Silver is up at the higher range, and it's acting quite nicely, up 12 cents right now at 16.56. This is saying, if I don't break out for a leg D this week, I might do it next week, but I'm trying my best to stay above 16 in the 16s, trying to bounce towards the high 16s. That's kind of what it's looking like now. It'll change course completely if all of a sudden the gold declines 35 to 50 points in the next week, and silver drops below 15, I would have to say 1587. Close under 1587 is in for a much longer digestive phase. But wait a minute, look at this. The dollar is still acting well, but it's not great. To have gone to a new leg E, after that move down to 95.84 and its high of 98.37, it should have had better. I love the green candles. Don't get me wrong, because this is a good-looking chart. MACD is good, stochastics at 92%, but for all the effort, I would have rather had a sideways move and then one big candle, then a little one, and then a big. I don't like these small candles because you're usurping energy. And that says that the EUR, USD, the euro-dollar currency pair, at the bottom here at 1.115 is trying to establish this V-shape, inverted V-shape, lowercase trough F, and this is a brand new trough F/B, in the weekly chart as some kind of a base from which to bounce. And that's really what I'm looking at over the next 2 days. What does the Fed do? And that says we've got to look at the TLT. I'm doing a lot today in this because this is for the week. Well, the week started yesterday. I wasn't here. 131.59.08. I'd drawn in this rectangle. I said, watch bonds. I think yields are going to be stuck in a range, and that's going to be important. If the TLT starts to trade above 133.30, that's going to be a big deal because that means rates are coming down. If the TLT trades below 129.50 in the next week or two, that says, uh-oh, watch out. Yields go quite a bit higher in the shorter term, that is. I'll be right back. Basil Chapman, Tiger Conditions Hour. As I go out, let me just say that crude oil right now is up to 38 cents, stuck in the lower range. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, I had a question about Nokia trading in. The reason why I took Nokia off my list a long time ago, NOK is the symbol, Nokia Core ADS. So this is one of the great electronic companies. It's got the lowercase h that goes to a lowercase m formation. and then it did gap up the other day. I did see that, but I didn't do any notation. So it's very interesting. I just don't know if I want to get, there are so many other companies. I don't want to get involved with an overseas company right now. So let's just leave it at this, that I think it's stuck between 580 and 510 for the next week and a half or 2 weeks or so. It's trading at 547. I had a question. I lost that email and trying to get everything moved over from different computers, etc. And then the one I had was that I loved was the old one. Can't remember what it was called. My email, the original email from way back. It was so simple. It just in one line. I had one format, and it just did everything. It was nice and big. I could see it. It didn't give me all this cumbersome stuff that goes on. And I lost that, unfortunately. And not only that, years ago, they stopped having support for it. I was just lucky that it lasted as long as it did. So that got migrated over into a little different one. So it's a little more complicated now. So I wanted to say that within that context, I had an email over the week, yesterday, I think it was, from a subscriber saying, I know you're down, but I just want to look at a couple of things. I just can't find it right now, but I remember very distinctly. So the list was stocks that we've had in my traders corner for my subscribers. We either have been in or out, but they have been lower priced. A lot of them are low priced ones. So this person has kept a lot. So X is what is in USA. U.S. Steel, 15.40, up 13. It made a peak D, but it's holding very nicely. We'll see very soon whether or not steel starts to actually move. So if you are in the position, be a little careful at 15.41. If it starts to trade under 14.50, it could go through another digestive phase, but right now it's acting well. AKS Steel. Oh, look at this beautiful move. Oh, I was doing the work on this last night, I think it was, and I called this leg C. Look at this beautiful, it's at 2.81, up 27 cents, up 10.63. Congratulations, you kept this going. I pooped out on it. This is very nice action. So that means you've raised the base. That's basically what I wanted to say. I didn't know it was at 281. It was earlier on, it was only at about 258. So this is a great move. And all I can say is that keep this one, and on maybe some part of the position, 238, give me an email if it goes down to 238. But so far, this is acting very well. IO is, this is Ion Geophysical something or other. What is it called? Ion Geophysical Corp. So it's trading at 9.05, down 0.11. It did make a peak E, made the V-shaped pattern double top with a doji candle right here on the 23rd of July at 10.49, a recovery high from all the recent lows back in the sixes, and now it's trading down. So just be a little careful here. If you're in it for the longer term, and you obviously are, that's very different, then I'm just going to say to you, I don't know if I would add to it, but give me a yell when it gets to 835, because that whole area of 845 to 832, that should be very good support, and I'd like to know that it's there. I might miss it because I'm looking at so many different charts. GCAP, you had a fantastic move if you're holding this. Congratulations. It ran up to a peak B and then failed at 532. I think that was a D in the 120-minute chart. Yeah, a peak D. Remember, I did show this in the 120-minute chart, and then it went sideways, and now it's pooped back down. It's in the fours, having hit 520. 532, fabulous move because you were in much, much lower. Now, don't give back all the profits. Just be careful. It's a nice move today, up 11 cents at 430. It might take a little while, but this is in play. But when it's in play, it can fall before it has a big move. So GCAP, this is Gain Capital Holdings. Be careful. I hope you took some profits off. And I didn't like that big spike up because it was on some potential takeover news, and now maybe the news is not working out. So, but it is in play, and that's the most important thing. I know you're looking at longer term. LTS is another one. LTS is this is Ladenburg Thelman Financials. It had a nice day 3 days ago. Now it had a fabulous move to a peak D at 387. Go all the way from 387 to the low of 2.9. Sorry, 2.88. Let me change that. 2.88, and now it's trading at 312. This is acting very nicely here, but it's just a weird stock. It has wonderful moves, and you got to kind of get out, then you got to kind of get back in. Or you write it down because it's making higher lows, but that might not say the pattern. So in the meantime, back at the ranch, trading at 312, very nice action. You want to see 336 in the next couple of days. Let's give it a whole week. The whole week, if we can get to 336, that's excellent action. I just don't want to see it go back to $2.93 or something like that. So just be a little careful with this, but keep it on your radar. And if you're still holding it longer term, that's okay, but be careful. Okay, so a bunch of those. I might have forgotten one, but I think that was the gist of it. Next thing I wanted to look at here was, I did OSTK. This is one that's been on my radar for a while for my subscribers who don't have it. Some subscribers do have it because there's one of those that are featured, but I didn't give it as an official buy. They like the pattern. So congratulations, trading at 2267, leg E in a doji candle. I wouldn't be surprised if the whole 19 to 1850 area has to be tested at some point fairly soon, as it goes back to the 200 period exponential moving average. MACD is good, stochastics at 87, that's very good. But the single leg A in the weekly chart from the 9s all the way to 24, right, 24.19 is the 200 period exponential moving average. Just be a little careful. I think it's getting a little tired, but keep it on your eye, keep it in your vision, because this is a stock that's moving up in this environment, and that's what you want to be focused on. Next thing I had a question on was Sky. Very nice move. Oh my, up $2.11 at 29.41. Skyline Corporation, mobile homes and RVs. What a nice move. I was following this one thinking it had, look at the weekly chart, it has to have a pullback, surely. No, it's walking the 9-period exponential moving average in the weekly chart. Didn't give a chance. I thought, let's see how this holds. It's done. I mean, it's already up $2.11. So there, I missed that one. Beyond. This is one that I said to my subscribers way back. I don't have it here because I had to redo this particular chart, but we did have Beyond at some point, just very briefly, and I can't remember, we made $2 or maybe lost $2. And then I said, all right, I have to wait. And then waiting is tough with this one because when it does move, it moves really quickly. So it hits an all-time high of 239.71 on the 26th to 239.71 on the 7/26. And lo and behold, it's had a little bit of a pullback today. It hit 183.50. Now, was this because they had an offering? If they had an offering, this is still a good-looking stock. It's in peak C or leg C in the weekly chart. You know what? Keep this on your list. This is in play. And even though it's really a manufactured product beyond meats, it's in play. That's all you want to know. Next time it pulls back, subscribers, just give me a yell. We might give it a buy.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
Tom O'Brien published the 900th issue of his weekly newsletter, The Gold Report, on July 22nd. It's amazing he started the Gold Report more than 17 years ago when gold was trading at only $252. To celebrate, we're having a special Tiger Dollar sale. Right now, you can spend only $495 and we'll give you 200 extra Tiger Dollars, so you'll end up with 695 Tiger Dollars, which is the yearly price of the Gold Report. Tiger Dollars can be used for any TFNN newsletter or service, and this offer is open to new and current subscribers. With gold making 6-year highs and gold mining equities trading higher, this is a great time to sign up for the Gold Report at a dramatic savings. For all the details, visit the front page of TFNN.com. This deal ends July 31st, so don't miss out. Get your Tiger Dollars and sign up today for the Gold Report 900th issue sale. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, so wheat is trading down 6 at 497.5. So it had a fantastic move. So this is a continuous contract. So the price that I'm giving you is one that gets smoothed out. But it went from a weekly low of the 17th of May of 422.75, 422 to 557.25. I mean, that is just a whopper of a move in 2 months. And now it's pulled back 50%. And I think it could have a little bit more of a consolidation. I don't know if it's in play. I only know if it's in play if at any point in the next, I would say 7 trading days, as a week and a half, a little bit. If it can get into the 522 area, that'll be really positive. When I go to soybeans trading right now, down 8 1/4 at 896. It had a low. I don't like to type this in because it's a rolling contract. The low would be, the date is perfect, on the 17th of May, a week of the 17th of 814, runs from 814 to 919, 100 and something points. That's a spectacular move. And it's given back a chunk. So we'll have to see. It mustn't close under 880, but if it closes under over 920, 918 to 922, if we can just get into that area in the next week or so, that'll be very good. And Khan, as we say in Boston, Khan, sitting on the 200-period moving average of 411.5, down 5.5. It had a spectacular move from the 351-ish area to the 465s, and now it's given back a little bit less than the others, but it's still looking a little bit weak. So it could be that the grains take a little longer to consolidate, and then they have the stair-step move where you make a spectacular move, and then you take weeks to consolidate, and then suddenly there's a news event, and it breaks to new highs. If that's the case, it has to happen by the middle of July at the latest. That's when I would expect that corn is testing over 465. That's going to be very important. Now, the other thing I want to look at here is the TBT is the inverse of bond yields, and it's the 4 green bars that it's had over the last few days. But that doesn't mean a thing. Tomorrow by 4 o'clock, after the Fed speak, after what they say, and the way I'm looking at it right now, I think a 1/4 point is there. And then they're going to say, we're looking at mixed data. Some of the data is very positive. Some of the data is showing international weakness, and they're going to have this mixed picture. That's kind of the way I'm looking at it. If that's the case, we could go chop, chop, chop for a while. If this is negative surprise, it could be a really quick 400 points down in the Dow, 45 points in the S&P. But it's going to have to be something that says, things are looking way better than we thought, and either we're going to do a 1/4 point and then wait a while, or we're going to not do a quarter point. I don't know, I think they've spoken themselves into a corner to do the quarter point cut. We'll see what happens. Let the market tell us. In the meantime, back at the range, I would love for the positions that we have to hold very nicely under these conditions and then start new moves to the upside, because that would really build a powerful base for very important sectors. I was asked if I would look at the XLF. Yep, XLF is trading down 13 cents at 28.33. It has made a Chapman peak F. I can't call this anything F/B, but I'm calling it an F for now. And the weekly chart is a leg D. And this is going to be very important. Why? Because the monthly has finally moved out of that downtrend channel. Time alone would have done this, but it's great that you've got price moving as well. The MACD's turned up, but it hasn't crossed positive. And look at this. The stochastic's at 68%. It needs about another 1.5. A closing price on a weekly basis of about 1.5 higher in the XLF, the S&P Financial Select Spider Fund, to see the stochastic get close to the 76, 77%, getting near my very important 80% rule. So that's that. The other thing we're looking at here is the GDX. I was asked about GDX. Yeah, GDX made that peak the other day, peak D. Oh, what am I talking about when I say peak D? I'm talking about this. In the Chapman wave methodology, you're always looking to try to identify the lowest low bar and then count each successively higher peak, alphabetized, peak A, B, C, 4, D, 4 peaks higher. That's where other things can happen. Could go to E, F, and G, but it's at D that other things can happen. And the patterns we look for, only 2 patterns, arch formation and a cup formation, or the third one is the straight line up or down. And then you can get the mix. The red says that the left side arch formation is going to take out negatively the left side low, and the right one says it's going to take positively out the left side high. So these are patterns that we look at. Straight line, arch, or cup. Well, what do we have right now? Look at the cup formation in the weekly chart of the gold mine vectors in leg C. This should go to a D. It doesn't tell you when. And the weekly chart is in a G/C. Wouldn't take much for it just to sneak. If it's this week, it just moves it up in leg C, G/C again. But if it's next week and it goes over 28.41, if by Friday afternoon it hasn't gone above 28.41, that's the level to watch. But on the support side, any close below 27.20 says be careful, because the next level of support at 26.80 says, uh-oh, deeper consolidation likely. I think gold is just having a high-level consolidation. It's been in play. There's a reason for it. I'm not sure what the reason is. Now, I had a question, talking about the bonds. It wasn't a question, it was a statement, and I'll just do this right now. Let me see if I can find it. I just want to check any messages. No. Okay. Oh, I got to get used to this. Oh, no. I have to get used to it, and there we go. Okay, so the question was, no, it wasn't a question, it was a statement. And the statement is, come. Oh, here it is. It says basically, where did he go? Come on. Oh, I don't like this. I had it so easy before. I'll get used to it. It just didn't take me a little while. The question is, did he really disappear? No way. I want you to read that. It was about the TLT, and it was saying that you really don't understand rates. And I have to agree. I don't think even the Fed knows rates. They know the interest rate level, but to understand all the ramifications and everything, do you think the Fed really knows 100% what to do tomorrow that will guarantee what the result that they want? No. So, yep, it's a wonderful statement to say, but I have to confess you're 100% correct. Oh, I'm not finding it. I didn't blip it out. It must be there. All right. Well, I can't find it. But basically, what Paul was saying was, yep, it disappeared. Obviously, Paul, my email didn't like you. It said you were saying that the rates, the durations have altered now, and you've got the shorter term over the yield is rising. What's going on here? And all I can say to you is, yeah, when you look at my, when you look at this particular chart right here, which is my three, here it is, my three, this is the white one is the TLT, the 30-year, the brown is the TNX, the 10-year T-note yield, and the 5-year, the FVX, coming up right now as we're going to a break. You'll see it. It's just in a range it's been in for ages. So I don't think that that's really the issue. Yeah, this is it. This is what I'm talking about right there. Just in a range, in the lower range. I'll be back. We'll talk about it for the final segment.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, so yeah, I found it. So Paul said, how could the Fed funds rate drop, which is widely advertised, and interest rates rise? I believe you don't understand rates. So I have to concur 100%. I don't understand rates. But don't tell me I don't understand bonds. I spoke about the Japanization of bonds before. Anyone on CNBC, anywhere, was talking about our interest rates, like Japan, going to zero. I started talking about that in the 1990s. And so, yeah, rates, I understand that where rates are, and rates are being Japanized right now because of the concurrent commercialization, how can I put it, the wish for so many countries, not really wanting to do it, but having no choice but to lower their rates to help their markets, etc. I don't know. This can last a little longer. When finally we get that inversion and you start to see rates go higher, and I suspect if we were sitting here in 3 years' time, at exactly this moment, in 3 years' time, will be saying, wow, rates, I remember when rates were down at almost 0%, and now they're trading, and they could be trading at 9 or 10 or 11%. I think that will happen at some point if certain conditions start to continue accelerating. But that's not my area of expertise, other than to say the Japanization of rates, interest rates, is something I discussed back in the early 1990s. Ever since I've been here at TFNN, since 2003, I've been talking about the Japanization of our rates. All right, now let's just get to this because we've got just a moment left. And what I am going to say is, as far as the market is concerned, the Dow at this particular point, and it's actually important because the Dow is really reflective of a lot of things going on right now, perhaps even more so than the others. If the Dow starts to trade in the 26,800s in the next week or so, that says, watch out, we've got ourselves a digestive phase coming on, and that could last a little while in time, maybe not so much in points. If we go into the 27,400s, I have to be really impressed and say, wow, that is amazing. I think we're in this digestive phase since the middle of July, and I think we're going to continue in this digestive phase a little while longer. Stay tuned for Steve Rhodes. You got Dave White. You got Tom O'Brien later on. I'll be back. Oh, and I'll be back with Tom a little later on as well. So have a great day. Otherwise, I'll see you tomorrow. Thanks for being here.